Welcome to the final day of the Passive Crypto Cash Flow Challenge. I'm extremely excited for those of you guys that made it to today. We just got off the VIP session and absolutely massive value from Yoni and Ryan. So excited to have you guys here today. Give me a "it's paid" in the chat. We got the chat flooded with comments. I see it happening right here on my phone. So if you guys got value over the past few days, and today we got a special call lined up for you guys today. So we're going to give a few minutes for everyone to come in for the final day of the challenge. And I'm going to share my screen. Also show you guys some results as well too. For those of you that were in the VIP roundtable yesterday, where Yoni broke down the liquidity pools and how to, get involved in them and earn passive yield. So I'll share one of the positions so you guys can see me claim the yield live and, how powerful that is. So yesterday on the VIP roundtable, Yoni showed you how to set up your first yield position. We saw people loading up the chat with "it's paid," asking questions, getting hands-on answers. And I'm going to share the results right now as well too. But before I do, I want to share with you guys what's been happening out here in Dubai. So for those of you that are tuning in for the first time, I'm actually out in Dubai. It's like 4 a.m. right now. I got my water. I got a little Red Bull. I don't usually drink energy drinks, and this is not a paid endorsement. Okay, Red Bull, you owe me some money for this right here, for a sponsorship. So not endorsed. But if you guys can see my screen right now, let me know. I'm going to share it really quick, and then let's dive right in. So give me a yes in the chat if you guys can see my screen right here. All right. Yes. See some yeses if it's working for you. All right. Let me know. I don't see any yeses yet. Okay, cool. We got one yes. So Dubai's awesome. Absolutely love it out here. So we got a professional videographer to come with us for the day to shoot this video. So I thought this was really cool, and this is going to be in the YouTube channel here soon. Possibly some intros as well. So we went to a private nature reserve and, did a tour for a few hours earlier. And it was a lot of fun. Actually, my first time doing this. And we rode some camels as well too. So I thought it was cool. Have you guys ever been to Dubai as well? Or the Middle East? Let me know. Let me know if you guys have been here. But this was a lot of fun. And honestly, it didn't cost that much either. So if you guys come out here, it was like $400. And so the yield that I'll show you in a little bit pretty much paid for the whole entire trip. And so this is the reason why we do what we do. And the reason why I'm sharing this with you is because a lot of people get into the crypto space thinking that they want 5% yield, 10% yield, 20% yield, $1,000 a month, $10,000 a month, 6-figure income, when that's not what they want. They want freedom. They want the ability to live life on their own terms. They want the ability to be able to travel the world. And for me, the two biggest reasons why, I got into crypto in the first place was because I wanted to not have to look at the price tag on a menu when I ordered food at a restaurant. And also I wanted to be able to travel the world and go see the coolest locations on the planet, because I'm originally from Boise, Idaho, and there's not much out there other than outdoors, hunting, camping, skiing, hiking, fishing, but there's a big world out there, and, I wanted to see it. So I wanted to be able to travel with, my fiance, who you guys can see in this video right here, and just experience the coolest locations that this planet has to offer. So give me a yes in the chat below if that's why you guys are in crypto as well too, for the freedom, for the travel, for the fun. This right here was really cool. This was a falcon show, and this guy would swing this, I think it was a mouse, around on the stick while the falcon was hunting it down. Then he eventually gave it to it. You see right here, the falcon just did not want to let it go. And he was giving us some history of the falcons for Dubai being like their national bird. And then we rode some camels to dinner. And we got to go to this really cool oasis where we had like a 5-course meal. They did a fire show as well in the sunset. Absolutely incredible. So if you guys come out here, you'll see the name of the company at the end too. I'll give them a quick shout out if you guys want to check it out. And like I said, it's only $400 per person. It's virtually nothing right here. Okay, so Platinum Heritage, I think it was great. Absolutely incredible. But I'm excited to have you guys here today. So that's the benefit of why we're teaching you these strategies, is because a lot of people want results to be able to support their lifestyle. And we showed everyone how to go from being idle crypto holders to making your first real yield and earning passive income with your portfolio that's just collecting dust and on a spot position, right? And so, but now that you guys know the fundamentals of liquidity pools and yield farming that Ryan covered on yesterday's call, that way you can start earning. The real question then becomes, how do you avoid getting wrecked? Because here's what nobody tells you about DeFi. For every real opportunity that can change your life, there's hundreds of traps out there waiting to empty your wallet. And Warren Buffett said, essentially paraphrased, making money is easy, Keeping it is the game. Rule number one, don't lose money. Rule number two, don't forget rule number one. And so we're, talking about rug pulls that look legit, smart contract bugs that drain funds overnight, pools promising, 1,000% APY that are in coins that will wreck you with impermanent loss, and phishing sites that look exactly like the real thing, and they're just misspelled by one letter or one character. And there's a lot of impersonators out there as well too that just misspell one social media, on an account, whether it be Instagram, Telegram, Twitter, that you guys have to be careful of, because we'll never message you directly. We'll never reach out to you asking to send us income. Impersonators do that, and then people fall for it because they think it's us, and they don't check something as simple as the spelling of the username. And as always, before we dive into any more details, I do want to give a quick disclaimer as well too from the results, like we have on the previous calls. But results aren't typical, guys. I'm not guaranteeing that you're going to make as much income in one day from a yield position like that, because your position, your portfolio size will vary, and your experience level will vary. So that's an example. And it's for example purposes only. You obviously understand that. You're very intelligent. Crypto takes, dedication. It takes commitment. It takes persistence, and it takes the willingness to learn and apply these strategies to get results. And as I always say, results aren't typical, so don't be typical. You're here because you don't want to be typical. Because what's typical? Well, 99% of people don't pay attention. They don't, apply these strategies, and they just dive into crypto. They go to a phishing website. They respond back to a scammer, and then they lose money, and then they call the industry a scam when they just didn't pay attention to the basics. Even the sharpest investors as well too, not just beginners, have gotten burned. I personally lost a lot of money over the years from some of these scams that we're going to be talking about today and how to avoid them. So, we've made these mistakes, and on previous calls, like I mentioned, over the course of 10 years, if we can help you compress timeframes down by helping you avoid those obstacles that set your portfolio back, then you can scale your portfolio faster to maximize your upside while minimizing your downside, right? So you don't lose because you're dumb. You lose because you don't know what to look out for. That's what most people, what happened to most people. They might be very educated, very intelligent in some other area, but when they get into the DeFi space, similar to what happened with me years ago, when I got into the crypto space, well, I just didn't really understand all these things, and I had to learn through the school of hard knocks. And had I known what I know now, thanks to our research team at Altcoin Pro, well, it would have helped me overcome those pitfalls. So this happens to smart people too all the time, guys. I've seen seasoned investors, people with traditional finance experience, millions in capital, and years of experience in the traditional financial space, lose 7 figures overnight. And crypto, is not in the crypto space. It's not because they were dumb. It's because they got excited. Like I just said, they skipped the basics. But that's not going to be your story. Not after today. All right. Because today, Ryan is going to jump on here and hand you guys the exact security checklist that we use to protect our clients' portfolios through bear markets, exchange collapse like FTX, the word that is kind of like Voldemort, the word that no one wants to say in the crypto space, and protocol failures as well too, like Terra Luna, Anchor Protocol, UST collapsing, that type of stuff, because it's super easy to keep your money safe in DeFi if you follow this 11 law checklist we're about to get into. So with that being said, if you guys were on yesterday's call and you got value out of what Ryan shared with you, I want to see an it's paid in the chat right now before I bring him up. Let me see an it's paid, guys. I appreciate you all for flooding the comments, flooding the chat. I see someone donated $20. Appreciate you. Dennis saying, thanks for everything, Nick, Ryan, the team. Learned a lot. You rock, man. Appreciate that, guys. Doing this for you, 4 a.m. I'm absolutely exhausted, but I love giving value. I know Ryan does as well too, and he's going to provide even more value for you guys today that missed the first 2 days. So make sure you tune in. Like I say, set aside all distractions, hide your kids, hide your wives, go into a quiet location with the notebook so you can pay very close attention, because when you pay attention, that's how you get paid. First you learn, then you remove the L, and that's how you earn. So with that being said, guys, I'm going to bring up Ryan, and he's going to take over from here and dive into everything else that you need to know to properly protect yourself and your portfolio. All right, Ryan, you here?
I am here. Am I up here now? I
Yes,
believe
sir.
I am. Okay, beautiful. What is going on, guys? I appreciate you guys all being here today. We are on the back end of the challenge, day 3. I hope you guys are not exhausted. I'm definitely not exhausted. I am wide awake right now. But I appreciate you guys for being here. I'm gonna get this pulled up right here, right now. Yeah, I know I feel you staring at me right now. I had some technical difficulties. The session literally like kicked me out of here like 10 seconds before I was supposed to go on. So I'm like kind of like scrambling, trying to get everything ready. Okay, cool. Now I think we're up. Cool. Awesome. So big shout out to Dennis Segala, by the way. I didn't even know that you guys could send us money, and Dennis sent money on here somehow, $20. I appreciate that. That was really kind of you. That was really kind of you. I didn't even know that was a possibility. But I feel like a Starbucks barista that just did a really good job. So thank you. I appreciate you so much. Beautiful. Well, let's go ahead and kick this thing off. All right. This is it Sharon? Is that the right one? No, I got to like get repositioned on my whole setup here. Okay. There we go. All right, guys, let's dive in. So today I'm handing you the exact security checklist that we will be teaching inside of the Altcoin Pro Accelerator program that will allow you to avoid losing everything to one click. It will allow you to stay safe from dodgy decentralized exchange protocols and liquidity pools. And it will allow you to avoid spinning your wheels trying to figure out how to set up your liquidity pool strategy. Okay. So next up is the 11 laws of DeFi safety when entering a liquidity pool position. Okay. It's super easy to keep your money safe in DeFi if you just follow these 11 laws, right? We have a whole checklist that's right here ready for you so that you don't even need us. You can just take these 11 laws and just start to go use them. So if you don't have like a piece of paper by you or something like that, I highly recommend that you do that, because this is literally the entire blueprint for what you need to do before you enter a liquidity pool position. Like I literally told the team, they were like, I won't say who, but there are some individuals on the team that were like, are you really want to give them all of that? That's so much. And I said, yeah, I do. There is no amount of information that we can give in a 1-hour session that will take away from the value of working with us in a closer way. It would be impossible. And if that was the case, that if we could give so much information away in 1 hour that it devalues our entire program and everything that we've built that actually makes us money, why are we offering that then? If we can give everything away in 1 hour to where there's no reason to ever work with us after that, we shouldn't even be in business. That's what I said in return. And that is a promise that actually took place. That was a real conversation. So now, if you guys have already gotten value over the last 2 days, and maybe even today from the VIP session or something, let's drop an "it's paid" in the chat. Let's see it. Let's see it. Have you guys gotten your money's worth? Whether it was, good Lord, everybody's sending us money now. Holy cow. Oh, thank you guys. I appreciate it. I wasn't expecting this. You guys are incredible. Thank you. So now I'm lost in my train of thought. You guys are just throwing money at us like a Starbucks barista. Anyway, so let's go ahead and just dive in, and I'll go back to where I was at because I completely lost track because you guys threw me off there. So I was at a loss for words. I didn't expect people to just send us extra money. It's very nice. All right, so let's kick things off with rule number 1, which is understanding the market directional bias. This is the first checkpoint on your DeFi danger filter because it frames how you look at every opportunity, okay? You wouldn't open a long position without checking the market conditions, would you? Yield is no different from that, okay? Because yield doesn't always protect you from market downside, right? In fact, if you're not careful, it can actually amplify it, which is a little scary to think about it, but it's fully truthful. That's the truth, and we're just being raw and honest with you, okay? This rule can actually save you from making yield decisions in isolation. It's important to zoom out and get an idea of the bigger picture before you do anything else, okay? So I want to break some of the common beliefs that get some people wrecked here, actually. One of the biggest mistakes beginners make is thinking yield is separate from market conditions. They think that just because you're earning passive income, that the overall direction of the market doesn't really matter anymore. But that's simply not true. And it's one that costs people a lot of money sometimes. So, because even in a great pool, if the market's dumping and your position's exposed, you can still bleed out value due to impermanent loss, and you're getting stuck with one coin. And if that coin is dropping significantly, you're still holding that coin, right? Earning a 30% APY over the course of a year, it means nothing if your assets also drop 40% in value. Yield doesn't replace market awareness. It requires it. So before you enter a pool, ask, what is the market likely to do next? Market directional bias just means being honest about where things are headed. If we're in an uptrend, great. You might want to, increase exposure to assets that are climbing in price so you can capture the price appreciation, and then you can get yield at the same time. If you were in a downtrend, it might be better to play a little bit more on the defensive side, right? Maybe wait for something to slow down and to find some capitulation, like what Yoni talked about in the VIP session. You want to focus on maybe some stable coins and other assets that might not be in a downtrend. You might want to look elsewhere, right? And in a ranging market, you might want to play like a DCA strategy so you can accumulate before the next leg up, or just sit tight with yield from stables, okay? Or you could go full on during that ranging market, and you could like find a pair that is like super correlated, right? To where the range is so minimal that you can just really pump out fees because you can make your capital work for you really efficiently. So basically the first step is just identify what type of market you're in, guys. Like, go on to TradingView. The first thing I would do is I would look at like Bitcoin, and I would look at like, I'd look at the overall crypto market cap. I'd look at those like macro indicators. I might even look at the S&P 500 so that I can see what the overall market looks like before diving in and like zooming in anymore, right? It's really good to like zoom out and like look at what like a mass amount of data is saying, and then slowly start to double click and zoom in to where you can get into more granular data. Kind of like if you're going to do a market analysis on the weekly, and then you might do it on the daily, then you might want to do it on the 4 hour, and then the 1 hour, and then 30 minute, and 5 minute. You don't want to start on the 5 minute. It's no different with this. Okay. So don't let juicy APYs distract you from the bigger picture. If the trend doesn't support the position, sit out or choose a safer pair. This one step alone has saved our portfolios more time than I can count. Now that you know how to read the terrain, let's talk about choosing the right battlefield. Okay. Because not every chain is worth playing on, and some are dead, some are just actually like imploding. And then we can break down like how you can actually identify this too. Okay. Cool. So, go back. So, all right. So knowing the market direction keeps you from entering with blind spots, but next up is knowing where the activity actually is. Because even in a bull market, some ecosystems are ghost towns. No users, no volume, no real opportunities. Yield doesn't exist if no one's trading, guys. Okay? Because you make money from the trades. So if there's no volume happening on a blockchain or on a protocol, there's no point in being there. So once you know what the market is doing, you need to know where it's happening at. Because if you're in the wrong place, even a good setup won't save you. Which brings us to rule number 2. So it's to go where the volume is, right? You're not going to make money if there's no volume, because you make money off the volume, off the fees, right? Coinbase is going to make more money from their exchange when there's more volume being passed through their exchange, because they make a fee off of each trade. They make money off of the trading fees. Same thing with you if you're a liquidity provider. If there's more volume on a blockchain, on a decentralized exchange, you're going to get paid more money. Okay. Let's talk about where people are getting wrecked here. Okay. Where they think it doesn't matter which chain I use, yield is yield, right? This is dangerous thinking. People assume as long as they're earning, they're fine. However, if the blockchain is illiquid, so anytime you guys hear me say chain, I want you guys to think blockchain. They're one and the same, okay? But when you get into this space, you stop saying blockchain and you just say chain just because it's shorter, right? So every time I say chain, just know that means blockchain, okay? So when you're in a chain that is illiquid or inactive or poorly maintained or your capital is at risk, you might not be able to exit, right? And if you do, you might get some serious slippage, okay? And you might even get front run, or you might find the chain has stopped maintaining the protocol completely. Yield on the wrong chain is how people get trapped holding worthless bags. You could end up with holding worthless tokens, unable to withdraw, or stuck in a protocol no one supports. This is how good investors lose good capital. Okay, so a safe chain has high consistent TVL, which, to bring us back down for a second, TVL is total value locked. So high consistent TVL, that just means high consistent amount of money in the blockchain, right? That's all that means. Real user activity across multiple apps. So this is decentralized applications because apps are built on blockchains, just like apps are built on the iOS App Store. It's this very similar. I mean, it's an easy way to look at it, at least. They're not identical, but it's an easy way to really get an understanding of it. You want to make sure that the development teams are still pushing updates, and you want to make sure that there's active trading volume, not just one hyped pool. Okay. Now, make sure you guys write this down here. If you haven't yet, feel free to take a screenshot, whatever you want to do, because this is important to know this, right? Because one of these can be missing, and then, you know, maybe you shouldn't be in it anymore. Because you could have high consistent TVL, but then you could have development teams that have stopped shipping updates, and then it's only a matter of time before the general public become aware of it and they take their money out of the blockchain or out of the protocol, and then it starts to fail. Okay. Because I wouldn't be in a blockchain they're no longer developing. They're not even trying anymore. I'd take my capital out as fast as possible, because in an emerging market like this, you got to move fast. You got to, it's a lot. Cool. So here's how we personally vet a chain. Here are the actual full tools that we use. So you can just take these tools yourself, go learn how to use them, walk away from this session with all of the tools available that, I mean, not all of them, we use more tools in this, but these are some of the serious tools that we use for this. So DeFi Llama is like our front page for DeFi. I mean, I would use DeFi Llama for everything. They've got a really good swap, like a DEX aggregator that you can use to find the best swap rate for your actual swap that you want to do, instead of just going directly to a single decentralized exchange. It'll look at multiple decentralized exchanges and be like, well, that one's going to give you the best rate. You should go through that one. And you click a button and it automatically does it for you. It's crazy. And then there's Dune Analytics, which is where you can check real user activity, DEX Screener, real-time trading volume, and then Token Terminal. This one is cool. You can actually see the dev activity and funding for the blockchain, right? So you can actually see what the devs are doing. Now, this is unique to crypto. You can't see that within Google. You can't see that within Facebook. You can't see that within Instagram. You can't see that within any of these centralized applications like Figma that I'm using right now, or Zoom that we were on the call on before, right? So if you wanted to buy stock in Zoom or Google, you can't go look at, to my knowledge at least, right? There could be something that I'm not aware of. You can't just go look at the number of what are they called? There's an actual word for it, but you can't go look at the deployments that they're sending with their dev teams. They don't give you that information. You can directly just go see that for Solana. You can go directly see that for Ethereum, Cardano. You can go see those things, right? And you can see their funding. Cool. So it's not just about making money. It's about getting your money back out. If the yield looks great, a dead chain means low liquidity, high slippage, and no exit. That's not yield. That's risk disguised as a reward. Next, we'll show you how to make sure you're even on the real site or decentralized exchange in the first place, because phishing clones are one of the fastest ways to lose everything. And this is a serious problem, guys. We've seen it many times. Rule number 3, Double verify that you're on the real decentralized exchange protocol, right? You don't want to go to like uniswap.org and the I in Uniswap is like a 1, right? It's almost like somebody trying to scam from a Bull Runners account where they change one of the L's to a 1 and you just don't notice it, when they message you on Twitter or something or Telegram. This is the same type of thing. This is not new though. This doesn't just happen with crypto. This has been happening with the internet as well. If there are fake Facebook sites and fake Instagram sites, there was even fake MySpace accounts or fake MySpace sites back when we were using that thing. Holy cow! That like top 10 friends thing was so toxic. That was crazy. But anyways, that's a little bit of an intrusive thought. So with what they'll do for these phishing links is what they'll put like one letter or word that's different, and you'll go to the website. It will look identical to the exact website so that you think it's right. And then in the case of Facebook or MySpace or something like that, you go to put in your email and your password, and then all they do is they take that information and they go off and they actually log in with your account, and then they log into your account, and then they start messaging all your friends. They start posting as if they're you, and they start to try to scam your friends. And then they act as you because it's your profile. So people will naturally trust it a little bit more. And they'll double verify it's the same profile. Be like, yeah, no, that's him. It's kind of weird just trying to get me to buy into his crypto exchange right now. I thought he was a farmer. But so that's a real problem in the Web 2 world as well as the Web 3 world, right? You don't want to go to the wrong website and you go to click your wallet and then boom, you're connected to the wrong website. It's a phishing link and they just tried to drain your entire wallet, right? And if you have a wallet security system in place that is built with intention, you could do that one day on accident, but because you set a max loss threshold for that wallet, you would only lose what's in that wallet versus your entire portfolio. Okay, cool. All right, so scammers are faster, better, and more convincing than you think, right? This can happen in a number of different ways. Maybe it's not just you, actually entering in the wrong link in your browser. Maybe you just Google searched it. And maybe a scammer actually paid Google for a sponsored ad that would go ahead of everybody else. That can happen. And now they're paying to scam people. So you guys need to be aware of these things. That way you're on high alert and like you're going to these websites with intention and you're going through a good way to get to these websites. A good way to do this is to go to like DeFi Llama or go to CoinGecko and then go to the website from there. So not typing it out into the browser, just go to it through a trusted source. That could be even finding their Twitter page and then clicking the link from their Twitter page, right? That way you can keep yourself protected. And then some of the different wallet tools that we use, like Rabby, they actually have this ability to whitelist certain domains so that you can whitelist domains so that you're, in the clear. And so that if you go to the wrong one, that one's not the wrong link. You're not going to get, that's not whitelisted. So it won't let you connect your wallet. So there's safety security systems in place that you can utilize to stay safe. Okay. Now here are some additional layers of protection. So one, you can use Pocket Universe, which is a Chrome extension. It also works on Mozilla Firefox, I'm pretty sure. I don't know if it works on Safari. It works on Brave browser. Anything that's like a Chromium type browser, it'll work for that. So you can actually download that. And what that will allow you to do is every time you go to sign a smart contract or connect your wallet, it will read the smart contract that you're about to sign. And then it will convert that into human readable English language, not just code. And it'll say, hey, this is what you're doing. Are you sure you want to do that? And you can go, no, I don't want to do that. And then you can just decide not to do that, right? You can also get a separate wallet for DeFi only. This is kind of what I was talking about with that like max loss threshold idea. And then you can get a hardware wallet that forces manual approval for review. So that in that extra step where you have to go find your wallet address or go find your like hardware device, you're like, wait, was that even the right site? Right? It adds another action that to create like intentionality to go like, wait, I'm putting this in. Let me make sure this is right. Okay. Cool. So you can do everything else right, but one wrong connection, one fake decentralized exchange, and it's gone. So slow down, verify every protocol, and never assume you're too smart to get scammed. Okay? That's when mistakes happen. Next, we'll talk to you about what happens after you're sure the protocol is legit. So we passed the sniff test. We know that it's the right one. And then you can figure out how to verify the actual pool and the tokens that are involved. Because even inside real platforms, there are still landmines that can blow up and boom, they got you. Okay? So rule number 4, make sure you're writing these down, guys. Use battle-tested protocols. Just because the site is real doesn't mean the protocol is safe. Many decentralized exchanges and farms are unaudited, abandoned, or exploitable. Even if the URL is legit, that doesn't mean the protocol is safe. We're not just avoiding fake sites now, we're filtering the real ones too, okay? Because some platforms haven't had their smart contracts audited by like a trusted source. So some were just built by amateurs that took advantage of open source code, and some are technically live, but the dev team's already gone. So rule number 4 is all about checking the protocol's track record, not just trusting that it exists. Okay. I know we talked about open source code yesterday. So since the code for some of these protocols are so accessible, there's people that might actually grab the code from these different iterations of decentralized exchanges, copy that, paste it, and boom, now it looks like they have a fully operational, legit decentralized exchange. Maybe on the, on the material side of things might look like that, but then you put in your liquidity and it's not there. So you need to know how to keep yourself safe in these situations, guys. Okay. Now, some people believe it's like it's live and like paying yield and it must be legit, right? Sure, when you're playing with 5K, 10K, but what about $100,000? Just because something is working right now doesn't mean it's necessarily safe. Tons of unaudited or abandoned protocols still run and are operational until one day they don't. Okay. So people see active and they assume that means secure. So let's just get that belief out of your mind. Just because something's active and you can put money into it and take money out does not mean that it's secure. Okay. In DeFi, the riskiest stuff sometimes works until it does not. And that's why we filter for longevity, developer activity, audits, and not just shiny interest rates. Okay. So here's the filter we use before ever putting money into a protocol. Is it audited, right? So basically what an audit is, to give more clarity there for you guys, is you and I don't know how to read smart contracts because it's written in code. A smart contract is just a conditional logic if-then contract, just like a written agreement that you might sign if you join the Altcoin Pro Accelerator program. And so it's a conditional if-then logic, right? Code, smart contracts are the same thing, but they're written in code so that computers can read them, right? That's what that is. So the issue here is that you and I probably can't read that smart contract because we don't know how to read code. So there's companies that literally all they do is get paid to audit code. And they have the smartest people in the world go through and look for loopholes and bugs and problems. And they get paid a significant amount of money to do this. They even run bug bounty programs so that they have like a whole event dedicated to trying to break their protocol. When I say protocol, I mean like their app. Like Uniswap is a protocol, Orca is a protocol, Radium is a protocol, Jupiter is a protocol. They're all protocols, right? It's just like the websites that you go to do this DeFi stuff. So make sure that you're working with protocols that have been audited with real reports and you can check those, okay? And then are the devs still building, right? And is the real money still flowing through the actual protocol? If it fails even one of these, we don't touch it, okay? And if this sounds like too much work, well, it is a lot of work, but it's worth it to protect your funds and still make use of legit DeFi opportunities. Thankfully, we've already done a lot of this research for you guys. So if you'd like to have a professional research team in your back pocket, might have something for you, okay? Cool. So now that you've verified the protocol is real and maintained, let's talk about the tokens in your pool because most people skip that part and it costs them. So rule number 5 is vet the tokens in the protocol. Okay. Now, if you're in a decentralized exchange, you should be comfortable holding the tokens that you're jumping into the liquidity pool in, because something could happen to the price of either of those tokens and then it could shift, right? Meaning that you might hold one coin more than the other instead of just being in the liquidity pool. So you want to be comfortable with that. So the belief that, you know, you're just here for the APY and who cares about the token is a belief that really can get people burned. Okay. Because you go in expecting the APY, and then unfortunately the coins might plummet in value if you get into like a risky meme coin play, right? And then boom, you thought you were going in for APY and then you just lost your money. That's a real thing. Okay. So here's the truth. If the token dumps 70% overnight or has no real market for it, your yield doesn't matter. That's how people earn 1,000% APY and still lose money. Okay. So before you enter a pool, we got 4 checks for you. 1, look at the volume. Is it trading daily or just a few sketchy spikes? And then 2, holders. You can look at the holders on bubblemaps.io is a good software for you guys. How many people are actually holding the coin, right? Are there thousands and like hundreds of thousands of real wallets that are holding this coin? Or is it like 20 whales in a bot farm that are holding this coin? And then they're holding like, you know, 40% of supply. And then the minute you get the price up to a certain point, they're just going to dump on you, right? You can actually look at those things to be safe from them. And then you want to look at the smart contract warnings on Dex Screener to see if it's a honeypot. Does it allow unlimited minting, which means that they can just make as many of the coins as they want to. A honeypot, to clarify that, is when you put money into the coin and then you're not allowed to sell it. Like the smart contract literally has a function in it where it's like, if people buy this, they're not allowed to sell it. Now, I'll be honest with you guys. A lot of these things are super obvious to be able to catch in the, with like just paying attention to the Dex Screener. Because when you look at the charts, you can actually see that if it's a honeypot, it'll just be green and going up and up and up and up and up, right? And if that's happening, that's clearly a honeypot, right? If you don't see any sell orders taking place, then that's a honeypot, right? And you also want to check to see if it has stealth taxes, which is where they're charging you like 10, 20% or more just to sell the token. Okay, cool. Then you want to check for the community. Is it alive? Check the Telegram, check the Discord. Wherever it's hosted, is it alive or has everyone gone quiet? These are all small checks that prevent big losses. Okay, cool. And then here are some of the tools that we'll use to look for the red flags. Dex Tools and Dex Screener are both very similar tools. You can use this to check for volume, look for volatility, holder concentrations, and then you can also look for like quick smart contract scans, which this will tell you. Like if it's a honeypot, it'll tell you like if it's mintable, freezable, all that kind of stuff. And then Etherscan, Solscan, Block Explorer. Say my slides aren't going. Can you guys see? Put a 1 in the chat if you guys can see the. Let me see here. Looks like it's going. I don't know what was going on. Let me see. Is it switching for you guys? When I do that, give me like a 1 in the chat if you're seeing it switch. Right now, I should be on a, okay, cool. It's working. All right. The team just texted me. They're like, hey, it's not changing. Okay, cool. So Etherscan and Solscan are block explorers that you can use. It's a little bit more advanced to be able to navigate these things. There's been tools created like Token Sniffer and like Dex Screener that can help you with seeing some of the data that's important to know if something is a scam, like a token is a scam. Like without having to go into Etherscan or Solscan and actually like look at the smart contract. It can be a little bit more difficult. You can also use Token Sniffer and RugDoc. That's another tool that's good for looking at specifics of the smart contract without having to read code, because we can't do that, you know? I can't, at least. Cool. So although meme coin pools have very attractive rates and you can cash in pretty nicely from them, there's actually some strategies that we have inside of our Accelerator program that we're going to be teaching you guys that do go over leveraging meme pools to make you can make some pretty significant returns, but there's significant risk that's attached to it. Like you could lose everything that you put into it if you're not being safe about it, just like everything else in crypto, right? But we wouldn't recommend actually doing that until you're a little bit more advanced with everything, okay? This is like a step 2, 3, 4, maybe even step 10. Get comfortable with doing some easier stuff first. So this is where most people forget the obvious. You're not just pairing with these tokens. You're earning them as rewards at the same time. So you guys probably saw with Nick, he harvested his yield. And when he did that, he actually got CBBTC. So Coinbase's wrapped Bitcoin. So it's just Bitcoin, right, on the Ethereum blockchain. I guess that one was on the Solana blockchain, but he earned Bitcoin and Solana from that liquidity pool. So if you're in like this meme coin pool or some like, liquidity pool with 2 tokens that you've never even heard of, keep in mind that the yield you're probably going to be earning, depending on the decentralized exchange, will be those 2 tokens. So like, if you don't want those 2 tokens, don't yield farm them, because you might just be earning yield in something that's going to go to 0. So you got to be aware of that. Okay. Which leads into this rule number 6, be okay with holding both tokens. I feel like we've like nailed this one in your guys' head like 100 times over the last 3 days. So if one token nukes, it takes your whole pool down with it. Your real exposure is to both sides. So know what you're signing up for when you're getting into a liquidity pool. Just because you're in a pool doesn't mean you're diversified. You're exposed to both tokens, and your results will reflect what they do together. If one crashes, it drags the whole pair down. If you're not okay with holding both sides of the liquidity pool, upside and downside, then you've already broken the safety rule, okay? Most people think when they're entering a pool, oh, I like token A, token B is just part of the deal, right? No, that's not how it works. This isn't like a token A is my main one, but like token B, this is just a nice bonus, right? That's not how it works. When you're buying into a liquidity pool, you're more than likely, depending on your range, you're getting in at around like 50-50. And you don't know 100% for sure what the price is going to do, right? Oh, I might as well go here. You don't know exactly what the price is going to do. So when you're providing liquidity, you're equally exposed, even if you don't like both assets. You are, as an investor, you're as invested in the weaker token as the stronger one, whether you like it or not. Okay. And if the second token goes south, so does your principal. So the question isn't just, is the pool paying well? It's, would I hold both of these tokens even without the yield? If the answer is no, it's probably a no-go on the pool. Okay. So a pool paying 100% APY might look great until the token you don't like crashes 80%. So sometimes yield can be like a little bit of a bait and switch scenario. Because you're coming into it like, oh, this looks so nice. And then like, boom, where did it all go, right? The asset is the real investment. If you wouldn't buy both tokens today, you shouldn't farm them together. It's kind of like saying like, oh, wow, I'm going to buy that house over there because I can make good money by renting it out. And you buy the house and then you're like, wait, but I didn't even want that house. I just wanted the rent I was going to make from it every month. Well, now you have the house. You should have been careful when you were getting that because it's in a bad neighborhood. The roof is leaking. Like it's all got all kinds of problems, but you bought it because you were looking at that $5,000 a month or that $3,000 a month that you could make from the rent. Okay. Now that you've picked a pool and vetted the tokens, let's take it one layer deeper. What is the intention behind this position? You want to declare your intention. Guys, this is not only the biggest mistake people make when they're getting into like managing their own finances, it's life in general, right? Like you should have intentionality behind the things that you do, right? Most people lose money because it's not that they just picked the wrong pool. It's because they got into maybe even the right pool, but with the wrong intentions, right? They didn't have a clear plan going in. Maybe they were just chasing APY, but the market moved a little bit, right? And they got a little scared, they closed early, or they maybe held too long. That's what happens when you enter a position without a clear plan and a clear reason. So rule number 7, make sure you're writing this down, declare your intention first. Okay. All right. Oh, hang on. I got to take a sip of water. Thanks for bearing with me. I'm running out of my mountain valley. It's a sad day. I got to go back to the store. Sponsored ad. So, all right. So farming without intention is gambling. If you can't say why you're in it, you won't know when to get out, right? If you don't know why you're in it, you won't know when to get out. It's very important. So what are you trying to do? Are you trying to park stable coins while earning low risk yield? Are you farming for specific tokens? Are you trying to compound short-term gains? Are you getting into the pool because you actually want to DCA out of the pool, right? You need to go into it with an intention. Is my intention to earn on the upside price potential and the interest that I'm getting paid from the fees? Is my intention solely just for fee generation? Is my intention to scale out of this position or out of this position, into this position or out of this position by leveraging impermanent loss to my advantage? There are multiple different intentions that you could have when you're entering into a liquidity pool. So declare that intention before you even get into one. Okay? Cool. So ask yourself, what is the goal of this position? What risk am I accepting for that outcome? And under what conditions do I exit? If you don't do that, then I guess I'll just go to the next slide. That's what I'm about to talk about. So intention is your safety net. With it, you can hold through volatility with confidence and you know when to act because you're not reacting emotionally. You're executing with a plan. That's the difference between farming and guessing. Now that you've declared your intention, we can move over to rule number 8. But I've been going over a lot of rules, and I think you guys might need like a little mini brain break for a second. Okay, so give me like a hashtag it's paid in the chat if this has been helpful for you guys. I just want to take a sip of water. My brain's cooking. All right. Cool. Butch Collins, rewind. It's live. Why can't I rewind this chat? Okay. It's paid. Deb, I appreciate you. Larry, I appreciate you. Joseph, Renee, debate the case. Debate the cause. Frank, Tony, heavy duty. Your parents were creative when they named you heavy duty. All right. Let me go back to here. All right, cool. So guys, if this does feel like a lot, it means that you're actually taking it seriously. So just know that that's completely normal. This should feel like an overload of information because you're learning a lot of new things at one time. You can't like even possibly try to retain all of this. If you were able to retain 100% of all of this information, you, my friend, would be artificial intelligence, and we need to study you. And we need to be careful with you around, okay? You are not expected to remember everything that you hear from this presentation. The goal is that you guys walk away with a few tidbits of information. You write down all the things that are important that you catch. You're like, oh, I need to apply that. So you walk away with at least like 5 to 10 things that you took away that you can deploy into a plan after this, okay? Cool. And later today, I'll be going over, for those of you that want to work with us in a one-to-one capacity, I went over that yesterday, but I'll be going over that again today if you guys missed it. Okay, cool. Rule number 8, you should never enter a pool without a clear thesis. What do I mean by thesis? Well, I mean, why this pool? Why now? And what do you believe is going to happen in the future with the price of these two assets? Because if you don't define that first, you'll be second guessing yourself the entire time. You won't know whether to stay in, rotate out, or double down. Smart DeFi yield farming starts with an intention and a thesis. Okay? You start with the intention. What do I want to do? And then you create your thesis of what this coin's going to do. And you say, based on what this coin's going to do, does that actually work with the intention that I have? And if no, you don't do it, right? You go find another pool. There's no shortage of liquidity pools, guys. There's tons of them. Is this not moving again? I don't know why the slides aren't moving. Hang on, guys. Let me refresh my screen. All right. What is the deal? Restart. Let me move over here. Well, sorry for technical difficulties, guys. All right. I will close that. Subtle advertisement in the meantime, not on purpose. Okay. All right. While we're doing this, a couple sessions ago, I asked you guys what your favorite color is. I'd be very curious to hear what your favorite animal is today. I personally like otters. I think they're pretty cool. It's like fish dogs. Interesting little fellas there. And then I think elephants are pretty cool. I got to pet an elephant a few months ago when I spoke at an event over in Thailand. Got to teach a bunch of people on a retreat. And then during that retreat, we actually went and hung out with elephants, and I got to pet them, which is very cool. They're not very soft animals. They are imagine like a manatee for people from Florida, but like less, slick. They're a lot more rough. Okay. Boom. Can you guys see that? And it is moving now. Can I get like a 1 in the chat if everything is moving? Can you guys see this? No, you can't. I got to share screen again. Kirby's ridden an elephant. I rode an elephant too. I honestly felt a little bad while I was doing it. I was like, he doesn't look like he wants to be ridden. But I was told it was an elephant sanctuary. So there we go. Apparently, an elephant sanctuary does not mean that the elephants are happy to be there. I learned that out the hard way. Okay. Is this working now? Perfect. Okay. Can you guys let me know? Yes, if this is working. Oh, shoot. Okay. All right. Declare your intention. Never enter your pool without a thesis. 99% sure this is where I left off. Can I get a 1 on the chat if this is where I left off? Just to double check. Yes. Alan's got to leave at 8. Sorry, bro. I'll try to speed through this bad boy. Okay. Cool. All right. So a lot of people think that creating a thesis only applies to trading and not actually earning passive income with yield farming. But that mindset is what gets them stuck in pools that don't align with their goals, risk tolerance, or market outlook. Okay. So look, this isn't a game. You're not just farming for fun. You're making strategic capital decisions that could affect your future, your family's future, your kids' future, your kids' kids' future. The decisions you make right now, it's the butterfly effect. It can affect things years down the line. So if you don't know that, what you believe will happen with the market, the assets, or the chain, you're not farming, you're actually guessing. So you need to actually make a prediction based on what you think is going to take place with the value of the tokens in the pool. You got to make a prediction with what you believe is going to happen with the market. You got to make a prediction with what's going to happen with the protocol. Is it going to be alive soon in like a few months to a year, 5 years, depending on your time horizon? All important things for you to know. So you don't really need a 10-page research paper to really be able to come up with your thesis, right? You just need to answer these 3 questions to make your thesis. What market condition am I farming in? Am I trending up, down, or sideways? What do I expect these tokens to do in the short term? Consolidate, rise, or drop? And what do I expect these tokens to do long term? If you can answer that, then congrats, you have a thesis. And if not, you have no business being in the liquidity pool. Okay? With a clear thesis, you'll be able to hold through volatility, exit when planned, and re-enter with conviction. Okay? Cool. Now, let's go over what nobody wants to think about, but you need to think about when you are being intentional with your strategy. Rule number 9, have a plan if your thesis goes sideways. Every smart investor builds with a margin of error. They don't just ask, what do I want to happen? They ask, what if it doesn't happen? You can't control the market, but you can control what you'll do if things shift. That's the difference between emotional panic and calm adjustment. And it's what keeps your capital safe even when your thesis misses. Okay? If you create an intentional plan of what to do if things don't go your way, then you're acting from a place of logic and not emotion, guys. The best traders in the world are not operating from emotion. The best traders in the world don't even get excited when they get a win. I've seen it. They're not like getting this rush of dopamine. They're like neutral. Like they just expect it to happen. Okay? The market does not care about your optimism. And holding longer doesn't help if the token's bleeding out or the pool dries out. Every real investor plans before it breaks, not after. That's how you stay calm, protect your principal, and reposition quickly. Okay? Here's what I want you to do every time. Set your exit condition. If this pool drops 30% in TVL, then I'll do this. If the token breaks my expected range, then I'll do this. If volume dries up for 3 straight days, then I'll do this, right? Know where you'd rotate that capital to. Is there a stablecoin pool that's waiting? Another token you'd prefer to farm? And how long were you planning to be in it in the first place? Like, what's your time horizon? Which we're went over next. Actually, we're going over that next. This is how professionals play defense, right? When you already know your next move, you can stay calm when others are panicking. You won't be frozen or fumbling. You'll adjust fast, protect your capital, and reallocate intelligently. That's what this challenge is about. Turning you from a hopeful hodler into a confident operator. And next, we talk about how long you should be in that play for the first place. That's rule number 10. So rule number 10 is decide your time horizon up front. How long are you planning to stay in this pool? Because if you don't answer that first, you'll let fear or greed decide for you later. And that's how most people wreck their own returns. Time horizon sets expectations with yourself, right? Which is important to do. We don't just have to set expectations with other people. We have to set expectations for ourselves. It's what separates someone from farming strategically from someone bouncing between pools, hoping one just sticks. Okay? Without a timeline, you exit too early out of fear or too late out of hope, right? If you have the clear time horizon, it tells you when to reevaluate and it stops your emotions from making decisions for you. Having these time frames like set for yourself, like your expectations set for yourself, it protects your capital and your confidence. Is this pool short-term, mid-term, or long-term? What's the realistic yield over that time? What are the signs it's time to rotate out? All good questions to be asking yourself. Define it now so you don't second guess later. So every pool fits into a time horizon that you want to be in it, right? Short term might be like launch farms, volatile pairs, experimental plays, or tight range positions. Midterm could be blue chip pairs with mid-range positions or stable but new protocols with good incentives. Long term could be stablecoin pairs or blue chip pairs with wide range positions as well. But define it before you click deposit, and you'll have the patience and context to ride the position properly. Now, there's just one more piece of the puzzle. How often do you actually check on these positions? And we break that down for rule number 11. You do not need to be glued to your screen. I want to keep in mind for you guys. You don't need to be glued to your screen 24/7 to pay attention to this stuff, but you do need to check your pool consistently. If you're going to have a pool that is semi-passive, right? You need to check that consistently. Even if you have a pool that's passive, you're going to want to check it every now and then, right? So set up a routine, whether you're checking daily, weekly, or monthly, and make sure you stick to it. Maybe what that looks like for you. I'm a calendar junkie. Like, I use my calendar for everything. If you and I are hanging out, we're doing something, it's not on my calendar, it's not happening. I'm sorry. I'm just, I got too many things that I'm thinking about. It's going on. If it's not on the calendar, it doesn't happen. So what you can do is you can identify, I want to set a recurring event on my calendar to check my liquidity pools every Friday or every Sunday or every Monday or every Thursday. It doesn't matter, at this time. Time block that. Just set that. Okay. Passive does not mean ignorant. The best income is protected income. Okay. You don't need to babysit it either. You might just need a 2-minute routine once a week or every day if you want to. So this could be like your little 1 minute or 2 minute pulse check, right? So you can have a checklist. Is the TVL still stable in the protocol I'm in? Are the rewards still coming? Has the value dropped? Has one token depegged or collapsed? The safest yield isn't set it and forget it. It's set it and check for a couple minutes each day or week, depending on how tight your ranges are. So that's what also depends, like what you need to do here, guys. Like, you remember when I was showing you guys a pool yesterday, and Yoni was showing it today on the VIP session, or Nick was showing a pool earlier today as well that he made like $400 in 24 hours. And you set your ranges. The tighter you set your range, the more frequently you're going to have to check on that pool. The wider you set the range, the less frequently you're going to have to check on that pool. So you might, it's something that you just have to play with, right? You get a feel for it. You notice that if I set it to be 5% to the top side and 5% to the downside, typically I go out of range this frequently, right? And you might go like, I'm going out of range way more than I'd like. I kind of want to reevaluate this, maybe put it to 6%, or like maybe you're looking at the actual price action of the coins, and then that's honestly what you should be doing. But determine how often you actually want to check it. You can make it more passive if you want to, but you're going to make less money, right? Cool. So let's be real. You worked hard to build this capital. You're learning how to multiply it through DeFi. So why risk it by ignoring it? This final step ensures all the other rules don't go to waste. Now you've got the 11 rules. You've got the filters. You've got the checklist we use to protect our own 7- and 8-figure portfolios. Who's ready to implement? Okay. Go ahead and drop a fire emoji in the chat if you guys feel like you've just been blown up with information right now, to where you're starting to feel a little bit more confident with the ability to go at this whole DeFi yield farming thing on your own, right? Go ahead and hit that fire emoji in the chat if you're feeling like you can go out and do this on your own. And I want you to be able to, right? And you might not be able to go do it on your own and maximize your potential, but you're at least feeling confident to the point where you can go try. You can go enter into a position, and you can at least start the learning experience by taking action. If you don't take what you guys are learning today and go take action, then you're not going to get better at it. You have to try it. You have to get in the trenches, and you have to actually do your best to actually apply what you're learning from this stuff. Okay. Okay. Cool. All right, guys. So look, I know today was a lot, especially if this world is still pretty new for you. We covered some pretty advanced safety rules, complex setups, and DeFi moves that aren't exactly beginner level. It was a fire hose of information, which was my intention. I literally wanted to get up here and give you like as much value in this 1 hour to 1 hour and a half presentation as humanly possible, because I want you guys to be able to be more well equipped to be able to make money with your crypto. Okay. Now, and if you're sitting there thinking this sounds powerful, but I don't know if I can do this on my own, That's not just normal, that's smart, because the real risk isn't that you'll make a wrong move. It's that you'll freeze, do nothing, and miss the window of opportunity that you have. Now, I want to elaborate on that right there for a moment, the miss the window of opportunity that you have. To be honest, I don't know how long these high yields are going to last in the DeFi space. And I'm not saying this as this like urgency tactic. I'm saying this like with all honesty. And the reason I say that is because right now people are learning how to get into DeFi, right? There's people that are learning how to make swaps on a decentralized exchange. So the learning curve that is required in order to be able to provide liquidity on a decentralized exchange and make money in a liquidity pool is a greater learning curve than just knowing how to swap on a decentralized exchange. So what I'm getting at here is that there are less people that know how to provide liquidity versus the amount of people that know how to swap on a decentralized exchange. And within that like difference is almost like an arbitrage opportunity for the people that know what they're doing, to where they can actually provide the liquidity and make more money from it right now versus in 3, 4, 5, 7 years from now, when everybody knows how to do it and there's more competition. Because you make more money if you have a larger percentage of the overall liquidity pool. For example, if there's $100,000 in a liquidity pool, for easy math, and I have $50,000 of that $100,000 in that liquidity pool, then I would make 50% of the swap fees that the traders are paying. But now let's say there's a gajillion dollars in this liquidity pool and I'm only able to put in like 10 grand. I'm going to make a smaller portion of those trading fees. So we want the trading fees to continue to go crazy so that you can print money as yield farmers. But as more people learn how to yield farm, we don't know how long these yields are going to be as high as they currently are. So take advantage of it now. Don't wish that don't wait 5 years or even like a year and then look back and go, wow, the yields are nothing like they used to be. We don't know what the future holds for that because we are literally in uncharted territory. This type of stuff has never been possible in the human existence. Okay. So the truth is there are way too many moving parts with crypto, right? There's wallets, there's bridges, there's liquidity pairs, there's on-chain tools. It adds up fast. And for every legit opportunity, there are 10 scams waiting to drain you. The reason I've stayed protected while building real wealth in crypto, it's not just knowledge, it's support. The kind of help that steps in when you're about to click the wrong link or misread a chart or forget to set that alarm so you can check your portfolio. Thankfully, I've got a research team in my back pocket that, I've hired that I personally trust, and they're smarter than me, guys. I might be able to articulate it well on this slide deck. At least I think I have. But they're far better than me at actually understanding and getting into the nitty-gritty of everything. I actually had, and I say this not to downplay myself, but to build my team up is the intention. Somebody actually booked a one-on-one call with me, and I read the intention for the one-on-one call and what the guy said, and he was looking to pay me directly. And I said, I'll be honest with you, man, I can help you with this. I really can, but my team knows more than I do. I really suggest you jump on a call with Yoni, is what I actually said. He's like, okay, sounds good. And I rebooked him with Yoni because our team is so good that I would be doing him a disservice if I didn't allow my team to actually take that. Okay. So there's a lot of moving parts to this. So you really want to make sure that you're getting the right support to be able to take care of yourself with your portfolios. Okay. So you don't need to become DeFi experts overnight, though. What you do need, though, is someone to walk you through this one call at a time. Everything you learned this week, from setting up your first pool to protecting your stack, that's just the foundation. Now, I'm going to start to dive into our Accelerator program here. So if you guys already learned about the Accelerator program and you already realize you're like, man, I'd love to do that, but I'm just not in a position to do it right now. I don't want to waste your time. if you don't need to stay on for the rest of the presentation, if that's you, but we're going to keep going through it. And maybe there's somebody that would be a good fit for something like this. Okay. So I'm going to dive into that now. Okay. Is that cool with you guys? Is it cool if I start to dive into the Accelerator program so I can break that down for you guys a little bit more? Awesome. Joseph, reach out to our team, please. team@altcoinpro.com. Okay. I got some ones in the chat. I got some, you guys are amazing. I love you guys. I appreciate that. Cool. All right, guys. So what is the Altcoin Pro Accelerator program, right? It's a private mentorship where we build your entire crypto wealth system with you in a one-on-one setting. Okay. This is the Altcoin Pro Accelerator program logo that my girlfriend made for us. So this is something that Nick has told me the Bull Runners community has been asking for about like 5 years now. It was built for smart investors that have established portfolios and are interested in paying for speed, structure, and peace of mind. That's what high-level support is for. We built this program for busy professionals that already have sizable portfolios and individuals who might have been buying up a little bit of crypto year over year until eventually it became larger than they really were comfortable with holding without having a dedicated plan in place. Okay. It's built for individuals that are tired of trying to figure it out alone on YouTube or Twitter, for people overwhelmed by DeFi, wallets, or security best practices and the complexities that can come with it, for people that have been burned by past investments or scams and are ready to rebuild with clarity and safety, for people that are feeling the fear of missing out, but afraid to take action without a plan, and for people that are sitting idly with their coins with no real strategy and they want to squeeze all the juice out of this once-in-a-lifetime opportunity that crypto is presenting to us all. And the way that we do that is with our SGS framework, okay? So by following along with our SGS framework, we help you set up your wallet system and security plan so you can sleep easy at night, knowing hacks and freezes can't take you out. We help you architect your portfolio across stable plays, high upside gems, and safe yield customized to your goals, and plug you into insider research, teach you how to claim airdrops, earn yield through our DeFi strategies, and find low market cap coins in the pre-markets before they actually explode and before the general population even knows how to buy them. And we're with you every step of the way with direct one-on-one access to myself, Nick, Yoni, and our entire team of crypto researchers and mentors. And we do that all by following the 3 pillars of the SGS framework. And we condensed this down for you guys after the feedback from the last call, so it's not as long, I promise. So pillar number 1 is the ironclad portfolio protocol. It all starts with security. Like I said on the last call, if you build your house on sand, the foundation will crack and crumble until the whole thing falls in over time, right? We want to make sure that you're building your portfolio on like a solid foundational concrete slab, okay? So the ironclad portfolio protocol was inspired by time-tested portfolio principles and adapted for the realities of crypto. It helps you with building a resilient, decentralized portfolio that's secure against volatility, inflation, black swan events, and the risks unique to this market. We go beyond basic diversification. You'll learn how to structure custom percentage allocations across stable assets, high upside plays, and on-chain strategies, all while keeping your crypto safe from scams, hacks, frozen exchanges, and centralized failure points. This is your foundation for stress-free investing, a portfolio designed not just to survive chaos, but to maintain clarity, preserve capital, and give you true financial sovereignty, no matter what the market throws your way. Then we have pillar number 2, which is our passive yield engine protocol. And this is where we grow. So we start with securing, then we go on to growing, and then we got number 3. So pillar number 2, the passive yield engine protocol. Your portfolio shouldn't just sit and wait for the number to go up, right? It should reflect your goals and go to work for you. Just like how you don't buy a house and just let it sit there. You either live in it so you don't have to pay rent somewhere, or you put it on the market for rent and then you make money from it. No different with your crypto. This protocol gives you the ability to strategically build a diversified passive income generating portfolio that matches your financial goals, risk tolerance, and investment timeline. From liquid staking to beginner-friendly DeFi liquidity pools, we show you exactly how to build your crypto to work, even if you're brand new to on-chain yield farming. By the end, your portfolio isn't just held, it's compounding. You'll turn idle coins into consistent income streams, all through simple, proven systems that maximize upside while managing risk. Pillar number 3 is the pre-market positioning protocol. Okay, so the idea, I'll go over that after this. So the pillar number 3 is the pre-market positioning protocol. You don't need more plays, you need the right ones. So once you're earning from our passive yield engine protocol, you then take those, like the earnings from the passive yield engine protocol. It's like you're earning all this yield, right? From like your Solana pool, or like your Bitcoin pool, or your ETH pools, or like maybe your CBXRP pool, right? Or maybe your stablecoin pool. So you're earning yield from that, and you take the earnings from that, you maybe put that in another wallet, and then we allow you, we teach you how to access the pre-markets. What is the pre-market? Well, a pre-market is where the coins are at before they're available to be purchased on Coinbase, Binance, Kraken, KuCoin, any of these centralized exchanges. In order for a coin to be listed on a centralized exchange, it has to go through approval of a centralized company, which means that you're missing out on purchasing coins before that actually happens. And what happens when a coin gets listed on Coinbase or Binance or KuCoin or Kraken or any of these centralized exchanges? More people now have the ability to purchase them. So now the general public gets access to buy them, which typically does what to price? Well, if supply goes up and the demand remains the same based on supply and demand, which is what price is, boom, price goes up. So we also have multiple strategies that we teach you while getting into the pre-market, such as our house money strategy and our moonbag strategy, so you can operate at full capacity while you're playing inside the pre-markets. Okay. Now, so you get those 3 pillars. Okay. But you don't just get access to those 3 pillars through our 16-week program. You also get full access to Altcoin Pro University for the duration of the program. Okay. Which is our self-paced crypto A to Z program with 150 plus lessons, and you get unlimited credits. Okay. Now I want to make sure you're aware. It's for the duration of the time that you're in the Accelerator program. Once you're not in the Accelerator program, you will need to re-up and you'll need to start going back into things. Okay. I just like to over communicate so that expectations are set properly. Okay. Cool. And then you also get access to our all new Altcoin Pro Accelerator program module that will include like time-tested portfolio strategies, low-cap gem hunting strategies so you can thrive in the pre-markets, as I was talking about before, and our proprietary DeFi yield farming strategies that allow you to maximize your yield while utilizing impermanent loss to your advantage, which is effectively turning impermanent loss from the enemy into your ally. Okay? Which is huge, because you don't just have to be screwed by it, right? Now, on top of that, you get access to, and by the way, this is going to live inside of Altcoin Pro University. So it'll just be a course module that you're going to have to unlock once we put it in there. Okay. Cool. Then every week, you not only will have access to the 3 weekly coaching calls that are inside of the university program, going over skills like technical analysis, the latest crypto news, and uncovering the latest opportunities. But you'll also get access to 2 extra weekly calls that are exclusive for Altcoin Pro Accelerator clients. One's for DeFi, and one is a bonus surprise that I'm going to review a little bit later for you guys at the end of this. You'll also get access to our proven airdrop strategies so that you can stack free crypto. I don't know how many of you are very familiar with crypto, but in the bear market of like 2022, 2023, like that was a heavy part of our strategy, where we had multiple clients when we had our one-to-one program back then, where they were earning like $20,000 airdrops. And if you want to fact check me on this, you can look up the Jito airdrop. That's JITO. That's JTO. That's the token. We caught that airdrop. We caught the Dimension airdrop, which is DYM. We caught the Wormhole airdrop, which is W. We caught the Hype airdrop, which actually one of our coaches sold. He got a 6-figure airdrop from that, which is absurd. Yoni got a massive airdrop from that too. I made a mistake and I was working too much and I forgot to click accept before the time ran out. Not very happy about that, but yeah, It happens. But yeah, airdrops are a huge part of what we do too. So you will be learning about that if that's something that you've been curious about. Okay. You'll also learn about our proprietary yield strategies inside of DeFi. And then you'll actually get personalized portfolio reviews and audits from our team. Okay. Plus, you get exclusive bonuses and direct access to our C-suite team and our research team with our crypto mentors. So here are some of the individuals that you'll be working with. You're already familiar with Ryan and Paul. We got Solj and DeFi Mo. If you're in Altcoin Pro University and you've been loving the support that's been coming from DeFi Mo and Solj, drop a 1 in the chat. A quick story with them, which I think is really cool. And I haven't, even Altcoin Pro University members don't know this. We actually, when we were working with Big Crypto, we had a more intimate group. We had about, around 1,000 clients there, a little more than that. And Mo and Solj, actually, Yoni found them through Twitter. And he was just going back and forth with them because he was like, man, these guys are smart. They know what they're doing. And then I said, well, if they know what they're doing, they're smart, bring them into the group, man. And let's kind of, incorporate them into everything with what we're doing with Big Crypto. That was the old company name before we rebranded to Altcoin Pro with Nick. And Mo and Solj just continued to deliver a ton of value inside of that group. And due to that, when we got into a position where we were able to, hire them, we did immediately. And we brought them on board, and it's been a really good decision. I've been very happy with both of them, and they're experts. And I wasn't checking the chat, but I'm sure if I go to the chat, I'm seeing like a bunch of ones and people that appreciate them. Yeah. Gary, Renee, Icewazer. Yeah. Awesome. Cool. All right. And then you still get access to the entire C-suite team, right? So that's myself, Nick, and Yoni. Okay. You'll get hands-on guidance from us. You can ask questions anytime. You guys, like, literally the way the one-to-one works is like we do all of our team communication inside of Slack, right? So we're literally in Slack 24/7. Well, what we've done is we've actually created a way for you guys to have your own dedicated support channel for you guys inside of our internal communication structure. So you'll be right there with us where we're checking all of our team notifications throughout the entire day, so that we're there to get back to you instantly, right? And then we're also setting up a bunch of systems in there so that you can have your to-do list. And like, it's not just like a one-to-one group chat. It's honestly like a premium support hub where you're going to have like action items, bookmark links, like everything. It's like, kind of came up with it like 2 weeks ago. And I was like, this is incredible. I don't know why other consulting groups that I was working with in the past that I was a client for weren't doing that, but I'm very happy with it. And then let's get that to play so I'm not sticking my tongue out. So then you also get the 16-week of private one-on-one accelerator calls. And this is where we help you with implementing the SGS framework. Okay. Look at, that's me in the same spot I'm in right now. Cool. And then this is the timeline for that. So week 1 is where we get you set up for your onboarding call. So we start off with, you're going to fill out an onboarding form. And what this is going to have in it is it's going to have honestly a lot of questions, just to prepare you. There's a good amount of questions on there. Could take about 3 to 5 minutes to fill it out. Maybe more like 3. I guess some people in here, I think you've already filled it out because some people have already joined us. You might be able to say like, that took 1 minute, whatever. But in that, we learn what your experience with crypto is. So it's questions like, have you already got into a liquidity pool? Have you actually bought an NFT before? Have you used a DEX? Have you used a wallet? Have you voted on a DAO proposal? All those kind of things. Because those type of questions let us know like how experienced you are with crypto. So we know how to guide you and know where the blind spots are that you need to actually learn. And then we ask you what your goals are. What's your time horizon with those goals? What are you expecting to make every year on your crypto? Different things like that. Because that's what allows us to jump on with you on the week 2, which is the wallet security system setup. The Ironclad crypto security wallet system setup is what that is. So basically we figure out where you're at on the line of like, do I value convenience over security more? If you value convenience more than security, then you're going to have a little bit more of a riskier wallet system setup, but it's going to be super convenient, right? And by it being riskier. I mean, it's more risky to like the 1% chance of some specific things happen, if that, right? It's just, we like to go overboard and make sure that it's extra secure. But if you do that extra secure system for a while and you're like, it's just too much friction to be able to manage my wallet, then we can adjust it from there. Okay. Then week 3 is the initial portfolio build out. So we'll work with you and you'll talk about the coins that you like. We'll go over some different example portfolio build out systems of like this, this is what some people do with their amount of blue chips versus stable coins versus mid caps to low caps to like micro caps, so that you can have an actual structured plan. And then it allows you to know, like, if I've made a ton of money with this coin, I should rebalance to fit my portfolio effectively, right? And then week 4, after we have that all built out, then the next step is to start to find the low-hanging fruit within your portfolio, right? So there might be like Solana that you could just like liquid stake or something, and then you could make some extra yield on that. Or you could put it into this liquidity pool that's earning a lot of yield over here. So we'll just like look for little like small tweaks that we can do to bring out an extra 5 to 10% APY in your portfolio with the coins that you're already holding without losing the access to the price appreciation. And then we go from there to more advanced LP strategies. And then we move into the pre-market strategies, the pre-market positioning protocols, so that we can actually start to take some of those funds that you've earned over the last like few months and start to deploy them to some higher risk plays that have 10x potential, right? And then once we get to the end of things, we will then combine all of those strategies together so that you have a cohesive system and you know what to do when you graduate from us, okay? Cool. And then we'll have a continuation option if you do want to continue to work with us, if that's something you guys were wondering, okay? So to recap, you've got custom ironclad crypto portfolio build out. You've got the passive yield engine and deployment plan, personalized pre-market positioning plan, direct C-suite access and the Altcoin Pro team, weekly group consulting calls and live Q&As, 150 plus lesson university curriculum, airdrop strategies and systems, high yield liquidity strategies, portfolio insight sessions and strategy feedback, DeFi and swing trading courses. Oh, that wasn't supposed to be there. Pretend those are both there. And 16-week of one-to-one accelerator calls, okay? Now, having a world-class plan means nothing if you're left alone to figure it out. So here you've got top experts in your corner guiding you step by step, adjusting based on your results and making sure you never get stuck, okay? This is a deeply personal program. You're not just buying access to videos, you're getting direct access to our team, real-time priority support, and one-on-one strategy, which means we only have room for 30 people, okay? We are not accepting more than 30 people because we are not willing to compromise on the integrity of the service that we provide. We could very easily come up here and say, yeah, let's bring on 100 people for that. And like, guys, we're literally giving up money here so that we can make sure that we take care of you. I promise. So right now, you can lock in your seat at $14,800 with a 100% refundable $1,000 deposit. So our team will post that link for you to place that deposit in the description. Like 3, 2, 1. Did you guys put it there? Did you guys pin that post? Yeah, can I get a head nod? Yep, you pinned it. Okay. Yes, Gary Franklin, APU will continue on as is. We're not touching that. APU is not going anywhere. Okay. Cool. All right. So then on Monday, July 28th, one day before my birthday, actually, the investment will be going up to 20K. Okay. So please submit your deposit today to lock in that $14,800 rate before it's gone, because this is for like the legacy cohort only. Okay. Now, if you weren't sold, we do have some bonuses, right? So we have an extra 30 days of access to the one-on-one private calls. So instead of it being a 16-week program, it moves to 20, right? You get extra 30 days access to one-on-one private calls, the live weekly group coaching calls, the portfolio audits, the strategy refinement. And then you also are going to get live weekly group coaching sessions with Nick personally. So you're going to be able to jump on with Nick in a group coaching setting. You You can get live market analysis from him before it ever hits YouTube. You're going to ask him your burning questions. You can see how Nick is structuring his own portfolio, and you can get insights on his trading strategies. Okay. So to sum it all up, right, we're going to lock down your portfolio so nothing on the outside, hacks, frozen exchanges, market crashes can wipe you out. We're going to get your capital deployed the right way, earning daily, compounding automatically, so it's not just sitting there collecting dust in an account. And we're going to put you in position for the kinds of pre-market moves, low cap gems, and airdrop plays that can actually change what your balance looks like in a year, not a decade. And you'll have every piece dialed in. The structure to keep you safe, the systems to grow your money faster, and the private research and guidance to make sure you're always a step ahead without second guessing every single move you make. Okay. This is how you build serious wealth in this space with speed, protection, and with a team that's been doing this long before the hype, standing right behind you the whole way. Okay. So here's what to do, right? My tech team should have pinned the link right now in the chat. I'm gonna have a QR code here in a minute that you can click. So go ahead and go to that link. You'll click the orange apply now button. You'll answer some questions for your application, because we can't just approve everybody. We need to approve people that we believe are going to get results with us. So then you can put down that 1K deposit for your chance to be one of the 30 investors that join us. So once you submit the deposit, you're going to get a thank you page confirming your application. Our team will look at your application and decide if you're a good fit. A team member will then reach out and let you know if you're accepted or not, in which case, if you're not accepted, we will just send you back the refund. Okay. Keep in mind, your application will be reviewed in the order that they arrive. So if you are deposit number 31, for example, and all previous applications were accepted or approved, then you will not be approved and you'll have to be put on the waiting list. If you get accepted, we'll get you set up and onboarded and help you with clearing up the rest of the payment. Okay. So for some people, they could get set up as soon as tonight. We've already had a bunch of people already sign up yesterday. I'm grateful to be able to say, I appreciate you guys. And, but either way, the only way to join us at this current price and get all the bonuses is to apply right now. Okay. So don't delay. Make sure that if this is something that you're really interested in, you actually take action and you apply. So now I mentioned that, I want to clarify something I said earlier, which is we need to make sure that we can get results for you, right? We're confident that we can help you guys with getting results. But if you're someone that's trying to apply and you have a $10,000 portfolio and you're trying to spend $15,000 for consulting and education, it's going to be a lot harder to get your return, right? It's going to create a lot more risk that you're going to have to put out there. It's not impossible by any means, but we would just like to work with individuals that there's not that added pressure to where we have they're like, oh, I got to make that money back, right? It's just a little tougher. And I just want to be completely honest with you guys. Okay. But if you are thinking to yourself, 14.8K is a lot of money, you're totally right. This opportunity is not for everybody because of what I just said. Okay. But let's say you have $100,000 in your portfolio, not because you need that, not because we're only accepting people with that amount. I don't want that to be the thing that goes in your mind, but just because it's easy math that we can do, right? You just need to ask yourself, with the help of the SGS framework and direct educational support, do you think you'll be able to make an extra 15% on your portfolio over the next year, right? That's only over 1 year. Now I want to ask you a question. Are you in crypto for the next year, or are you in crypto for the rest of your life? If you're investing in crypto right now, then I assume that you're planning on still investing in crypto 5 to 10 years from now. If that's the case, you'll be in crypto for the next 15 years, more than likely. So do you think that our guidance can set you up to be in a better position to where you can make at least an extra 1% on your portfolio over the next 15 years? Or in the off chance you have some crypto security vulnerabilities, is there any chance our guidance and support could save you from losing everything to one wrong move? These are the important and difficult questions that we have to be asking ourselves when we're trying to decide on if we want to do this or not. Okay. And then the other question, I got 3 questions that I want to ask you. that can help you with making a decision if that's you and you're on the fence, right? So there's really only 3 questions that you need to ask yourself in order to decide on if this is the right opportunity for you to move forward. Okay. Number 1, the first one is, do you trust us? Okay. Now I'm not going to say everything I can, because I can always do more, right? I live by that mentality. I can always do better. I can always be better, right? That's the endless pursuit of being the best version of myself. But do you trust us? I've done everything I can to try to put out a ton of value for you guys so you can just see a glimpse of what's on the inside. But the real question is, do you trust us? That's number 1. Because if you don't trust us, then please don't move forward. It doesn't make sense. Okay. Number 2, the next question is, do you trust yourself? If you're sitting there and you're like hesitant and you're not sure if you want to do it, ask yourself, is it me or is it them? Because if it's you, then think back to a time where you felt the same way and work backwards to figure out what had to happen for you to feel confident that you could do it. Right? Back when you were maybe playing soccer for the first time, you weren't very good, but then as you did it a little bit more, you got better. And then all of a sudden, I mean, maybe you never got good, but not everybody's gifted with the ability to be athletically inclined, right? But there's multiple different things that you could be bad at the start, and then you could get better at over time as you build your confidence, right? You weren't confident with sending an email the first time you did it. You weren't confident with sending a bank transaction the first time you did it. You're not going to be confident with crypto the first time you do it. So if your hesitation stems from it's me, I'm not fully ready, I don't know if I'm fully confident to take this step, ask yourself why not. And then ask yourself, what does the best version of yourself really look like? Does the best version of you question their ability to learn? Probably not. It's a harsh question we have to ask ourselves when we're doubting our own capabilities sometimes. Okay. Now, the first question I will review before I get to the third. Do you trust us? Second one, do you trust yourself? The third one is, can you afford it? That's it. Do you trust us? Do you trust yourself? Can you afford it? Do you trust that working with us will get you better results than working by yourself? Do you trust that you can actually apply what you learn from us? And can you afford what we have inside of our program? Okay. And if the answer to all 3 of those questions is a yes, then I'd love to welcome you to submit your application, because I still can't. That'd have been way cooler if I could have just said, like, I could welcome you into the program, but I can't do that because we have to do the application first. So that I welcome you to scan the QR code and put in the application and submit a deposit. Cool. All right. Now my whole spiel is over there. I just want to make sure I do everything in my power to put in the right energy that could help you guys with making the best decision for yourself. Okay. And I really hope you know that energy comes from a genuine place and not from a place of like, we're trying to make money, because we've already told people that they can't move forward with us. So now, if you're still here, congratulations. You are the dedicated ones. I want you to DM us passive on Instagram for our Instagram account, altcoinpro_. If you don't follow us yet, you should follow us. We post some pretty good news and sometimes some funny memes about crypto. Would love to catch a follow there. And it will be available for only 24 hours, just because we can't leave this automation up for the rest of our lives. It's going to get in the way of some other things that we have to do. Okay. And increase the bloat of our back-end structural system. I'm a freaking nerd. But anyways, that is why it will only be up for 24 hours. So please make sure you guys go and you DM us passive on Instagram to get access to the recordings, okay, of the general sessions. Cool. All right, guys. Well, that is it for me. I appreciate you all immensely. I'm grateful that you guys are on with us. I've had fun over the last 3 days. I hope you guys have had fun with me. I've tried to make it as entertaining as possible by telling jokes here and there, because that's just who I am as a person. And I try to give you guys as much value as humanly possible. So really try to lay it all out there for you guys. So I appreciate you guys. more than you know. Again, I like to end my sessions with this like every time, just because I really don't take it lightly that you guys choose to spend your time with me, right? It's been 6 hours over the last it's been 6 hours over the last 3 days that you spent with us on these calls. You guys could have done anything with that time. You could have been hanging out with your kids. You could have been hanging out with your wife or girlfriend. You could have been hanging out with your friends. You could have just been like meditating out in the woods or something. I don't know. But you chose to spend that time with us here. And I promise that if you are giving us your time, I will do everything in my power to make sure that you get an ROI on that time. Doesn't necessarily have to be financial, but that's kind of the goal of the back end of the program for you guys to learn how to do that more effectively on your own. But whether that's like having a good time, having a fun time, like any of that, I just want to make sure that you guys never regret any minute you spend with our company. Okay. That's my goal. I love you guys. Thank you so much for being on these calls. This 3-day challenge was actually a blast. I've actually had a lot of fun, and I was a little like nervous going into it, thinking that I was going to be just physically drained by it. But like, I've been energized by this stuff, man. I appreciate you guys a ton. I hope it was worth every minute you spent with us. And I will see you guys inside of Altcoin Pro, either in the university or the Accelerator program. Good night.